Hello investors. In this video series, we will see how we can use Sharply Stock Screener. Now, the Stock Screener of Sharply comes with many different unique tools and features. So we will see how we can use all of them, and we will also see how we can identify good investment idea using the simple rules of stock screening. So basically, let's first start with the agenda. We will have this video series in three parts. In the first part, we will see how we can filter out the stocks with nonlinear profit growth. And we will use this Shapley's basic builder for that. In the second video, we will create some complex rules and we will see how we can use the Shapley's advanced builder to create complex rules. And in the third video, we will see the most powerful feature of Shapley's screener, that is the backtesting. So how you can use the historical data to fine tune your rules and how you can create fully automated strategies after that. So having said that, let's start with Shapley's basic builder. So I jump right into it. So yeah, basically once you open Sharply, to open the screener, you just need to hover around this and click on the stock screen. So once you open the stock screener, this view will be shown to you. So here we have two builders. One is basic builder that is shown right here, and second one is the advanced builder. We will see more about this builder in the next video. For now, we will focus on the basic builder. So the first step to create your screen is selecting the universe. Now for that, we have two options. First is that you can screen stocks based on a particular exchange. So let's say you want to screen stocks, only those stocks which are listed on NSE or BSE or NSE SME. But we will keep all here. Another option is that use a particular index as your universe. So you only want to run your screen on Nifty 500 stocks or Nifty 100 stocks. We will also still keep all option here. Now, in this video, we will try to identify stocks with non-linear profit growth. Now, what happens in non-linear PAT growth is that the EPS, that is earnings per share, keeps on rising at a more pace compared to the sales. And when this happens, the stock prices generally go up at a rapid pace. And you may wonder why does this happen? Now, the uh, one of the key reason can be the company is sitting on a huge operating leverage. So let's take an example that a chemical company has built two huge plants, right? Now all the fixed cost, including depreciation, are taken into consideration. And due to the high depreciation cost, the earnings will be suppressed in for temporary time period till the company start getting new order for that new factories. Now imagine in the second year, company starts getting the order, and now what will happen is all the fixed costs are already into calculation. So whatever sales will be there, the profit growth will increase at a disproportionate rate. So what will happen is if sales grow by let's say 10%, the EPS can grow by 20-30%, and this will give a huge surprise to the market, and then investors will start chasing this stock. So how we can identify this stock is let's simply create some rules. Now to create rules, what you can simply do is click on this add rule button. Now we will use the sales CAGR metric. So here you have this window. You can type sales there. You will see the sales CAGR 3 year is here. Now you can have the option of greater than is less than equal to. So we will say sales CAGR 3 year is greater than 15. And then we click on the add rule, and we can see that sales CAGR 3 year is greater than 15 rule is added. Now we will add another rule. To do that, simply click on this add another rule button. Now we will use sales 5 year. We also want it to be greater than 15. We'll click that, then add rule. So two rules are added. Now what we want to do is we want to compare this with EPS CAGR. So we'll click on add another rule. Now we will focus on the EPS. So EPS CAGR 3 year. Now Here we want to check the disproportionality. So sales is growing by 15%. And now let's say earnings EPS CAGR 3 year is greater than 35. So this is the basic idea of getting the non-linear PAT growth, that sales is growing by 15%, but EPS is growing by 35%. And let's add another rule that EPS CAGR 5 year is also higher, greater than 35%. So simply I'll add a rule. Now, for investors, one of the most important metric is ROE. If ROE is in single digits, investors will never make money off that company. So we will add another rule that, okay, I'll add another rule by clicking here, okay. And what I'll do is ROE TTM is greater than, let's say 15 is a particular number that we use. So ROE TTM is greater than 15. I'll click on add rule. And one important metric that we'll use is also the valuation should be comfortable. So let's say the PE ratio of the company should not be more than 25. So we will add another rule, and here we will use PE ratio is, now we have to select is less than 25. Okay, and I'll click on add rule. So all our rules are added now, and now we are satisfied with it. So we will click on this run button. Now, once we click on the run button, we can see that 39 stocks qualify through this filter, and all of these stocks are showing non-linear PAT growth. As you can see, companies like Jindal Stainless, Motilal Oswal, Angel One, Tanla, Share India Securities, JK Paper, Arman Financials. And you can see that their value score is also high, momentum score of many of them is high, quality is also high. So this is a good list of stocks to research. Now, I said that it is a good list, but how can you be so sure? Now we will check the same in our backtesting video. That will be the third video of the series. But now let's focus on what else can we do on this simple screener. So what we can do is we can create the factor maps in a single click. Just click on this button and you will be able to see three factor maps, that is quality versus value, momentum versus value, and quality versus momentum. So as you can see, this company like JK Paper and SCAM, Tech Products, let's say Agarwal Industries, all these companies are performing well on quality versus value. So they have high quality as well as the value score. Now we can also generate momentum versus value factor map, and same goes for quality versus momentum. Another thing that you can do is you can download this in an Excel file or a CSV file by simply clicking here. And all these columns will be there in your Excel or CSV file. So you can download this list. You can also upload the same in TradingView, because in the Excel file, we also give the ticker along with comma symbol. So you just simply need to select that column and you will be able to download. Now here we have another functionality of sort and limit. Now let's say you are building a strategy. Now you won't be investing in all 39 stocks, right? So what you can simply do is you can toggle on this sort and limit. Now let's say I only want 10 stocks out of this 39. So I'll select the number of stocks 10. Now, but how will I decide the 10 stocks? Will it be based on the market cap? So I want the stocks with the largest market cap? What I'll do is I'll select based on the return. So what I'll do is I'll use 6 month return as a metric. So stocks with highest 6 months return will be given as an output. So now only 10 stocks will be shown. You can also toggle on this exclude stocks in this ASM, GSM, ESM framework. But right now I'm not toggling it on. So I want to limit the stocks to 10. Right now, again, I simply need to click on the run button. And that's it. You have the list of 10 stocks based on the highest 6 months return. So as you can see, these are the stocks with highest 6 month return. So these are the stocks that are showing non-linear PAT growth as well as very high momentum in the past 6 months. So basically, you can select any metric here. You can change this to market cap to anything else. So you can use this to limit the number of stocks in your output. And then you can basically click on the save screen. You can give it a name. You can write the description. You can also publish it. Now, right now it is disabled. We will enable this functionality, and after that, you will be able to publish your screen. Right. So that's it. That this is how you use the basic builder, Sharply stock screener, to identify good investment ideas using the simple rules.